Perth and Adelaide have actually overtaken Canberra. Buyer demand and rental demand for properties in Perth, they'll give you $10,000 to convert to long-term rental.
Trust on the builders and the supply side of things that hasn't really resolved in Perth, and I think 2026 is still going to be a big year for Perth.
The most affordable suburbs are the ones where prices are going up more dramatically.
Every property advisor in Australia has been talking about Melbourne for almost 6 to 8 months. But what is that is stopping Melbourne to basically take off? I've been seeing a massive investor activity that is happening through Melbourne right now.
I think investors will return to the Victorian market.
Good morning and welcome to another episode of Help Me Buy Property Podcast. Today's podcast is all about hotspots. And, I know hotspots is such a cliche term, but we are going to talk about the start of the year 2026. We are discussing what the market has done, since the start of the year between January and February, and where the market is heading for 2026. What are the key expectations with, interest rate rise on the cards, with, the government spending and all of this Victorian CFMU, side of things and the building riots. So we'll discuss a lot of that as well in different ways, shape or form. But let me bring my guest in to, kick off the discussion. John, welcome back on the show. How are you today?
I'm very well, thanks, Moss, and nice to be back and looking forward to this year and what it has to offer. I think it's going to be quite an exciting year.
It's a major kickoff for 2026. I didn't expect the year to start, with such a boom. And we spoke about Tasmania when we last caught up, and, we discussed and disclosed some of the areas in relation to Tasmania. Since we last spoke, John, there has been one rate rise that has already happened that we sort of indicated that, this is going to happen anyway, so be mindful. And there are more on the cards that we were discussing as well. But, let's open the show and talk and take us through, what are the expectations for 2026? Where do we see that the market is heading? Let's have a bit of a discussion there.
Okay, that's great. So looking at, this is the Cotality or CoreLogic data for up to the end of January, which is the latest data and the median values. And what we can see, Sydney is still the dearest city in which to buy property. Brisbane is second dearest. But now we see that Perth and Adelaide have actually overtaken Canberra. Whereas last time we spoke, Canberra was the third dearest and fourth dearest, and now it's moved down to fifth spot. So the growth is much stronger in Brisbane, Adelaide and Perth than it is in Canberra. Then we have Melbourne, which has had moderate to minimal growth, followed by Hobart and Darwin. So now look at the annual growth, and you can see there the still Darwin over the course of the year has been one of the best performers, followed by Perth, and then Brisbane, Adelaide are the good performers as well. And it's interesting that a lot of people said, a year or two ago that Perth was overcooked. It reached the end of its potential. But when you look at the figures, you see, there is unrelenting buyer demand and rental demand for properties in Perth. They've got huge numbers of overseas arrivals, also getting large numbers of people moving interstate, especially from Victoria and New South Wales. And so the demand for housing is really accelerating, and the government is trying to do everything they can to increase the supply, but assisting developers, providing subsidies. If you're an investor and you've got a short-term rental, short stay rental property, they'll give you $10,000 to convert to long-term rental. So there's a lot of incentives.
It's very interesting when you look at Perth, and the market did show some signs of maturity mid to late last year, but you can see or we can see that how the market has responded to the government incentives and the 5% deposit schemes and the rental demand that kept continuing to come through, plus the new builds and the builders and the trust on the builders and the supply side of things that hasn't really resolved in Perth. And the building industry in Perth is really, really immature at this stage. That is still causing a lot of issues on the housing crisis side of things. So we honestly believe that Perth still has some air left in it. And I think 2026 is still going to be a big year for Perth.
No, I agree with you, Moss. It's but it will not be strong growth. It'll be more moderate growth.
Correct.
And pretty much through. And the same in Brisbane. and Adelaide, you can see that when you look at the quarter growth, it's still very strong here in Perth, Brisbane, Adelaide, even Darwin. But it's pulling back a bit. We look at the last month, and you can see there that Perth has actually been the best performer in
Yeah.
January, and that growth will moderate. Darwin's also moderating as well.
Yeah.
So, yeah,
Definitely.
interesting to see what's going on. Well, of course, and you mentioned the 5% deposit scheme, and that's really behind the growth at the moment. It's all in the bottom area of the market. The most affordable suburbs are the ones where prices are going up more dramatically.
Yeah.
And there's so much potential. You look at Melbourne, where the price cap 950,000. There are many suburbs in Melbourne where you can buy properties for well under that have got the potential to go up to that point. That's just first home buyers using the 5% scheme.
Yeah.
Yeah,
Yeah.
so there's a
It's interesting that Melbourne hasn't taken off, and every person in Australia, or every property advisor in Australia, has been talking about Melbourne for almost 6 to 8 months. And so let's open that can of worms and talk a bit about why is Melbourne behind the scenes. Biggest population that is there in Melbourne. Massive growth, massive infrastructure spending. But what is that is stopping Melbourne to basically take off?
Well, I think there's a number of things. The first thing, of course, is that Melbourne's house prices actually went backwards for a number of years.
Mm.
So we're looking now, we're probably in some suburbs back where we were 5 years ago. Others have now exceeded their previous record. But there was a fair amount of catching up to do. But having said that, I think the main thing about the Melbourne property market is that it's more affordable. That means now people are starting to look at buying properties, investors and first home buyers at price points of around 500,000-600,000. Now, it's a statistical term, what we call the median. What that means is the median is the middle point of all sales. Now, if you've got a lot of sales occurring at the bottom end of the market, as you do in Melbourne, it actually pulls the median down. So we look at that median there of Melbourne on that the chart is less than, what is it, 1% growth over the last month. Very minimal. In fact, last year in December it was negative, but that's because all the growth is at the bottom end of the market, not at the top end. So it's hiding what's really going on.
And that's so true. I think there are areas in Melbourne that are still growing quite effectively, and people don't see them at the top end. When you see them from outside in, you don't realize that there are areas like Point Cook, and there are areas around it that has seen serious amount of growth coming through over the last sort of 6 to 8 months, or Melton and around, or Aintree and all of those pockets. That has seen some serious growth coming through. But of course, it's only owner occupier that is driving this competition. I haven't seen a massive investor activity that is happening through Melbourne right now. And I believe that, there are a few key things that drives the investors away. One of them is, of course, the big stamp duty and the big land tax. And everyone that know Melbourne, there's this, they get slapped with, massive amount of land taxes as you accumulate more wealth in Melbourne as an investor. Plus, I've seen that the rental demand in Melbourne is maturing as well. So it's stabilizing. It's not growing as fast as Perth because of the population pressure or the net migration pressure, predominantly in core Melbourne. When you look at the regional markets, I think for the first time are doing the opposite to what the core Melbourne is doing, which has never been the case. The regions for Victoria has always followed, what the Metro Melbourne has done. Whereas this is the first time around what we are seeing is the regions are taking the lead and seeing more growth potential because they're in the affordable price points. And when you look at the medians for region, that's the story that you are telling, right? That,
Yeah.
you see that prices growing through quite quickly because, they're all at the affordable price points, and the population growth and the rental demand is basically driving that prices quite significantly.
It's true, and you look at Geelong, and you can still buy properties in places like Corio for 400,000. So it's incredibly affordable, and a lot of investors are looking at those areas because the yields are higher as well.
Yeah.
But I think investors will return to the Victorian market, and mainly because of the low price points. And yes, rents will go up. They're not going up as much as we would have expected. And one of the reasons for that is that a lot of people who were renters are now first home buyers. So they're changing from one to the other. So they're
Yes.
not renters anymore. But
Yeah.
with that huge population growth coming in, nearly all renters, rent demand will keep increasing.
Definitely. Yeah.
Mm.
But the west of Melbourne has a lot of supply available. It's not like landlocked like Adelaide or parts of Perth, right? It's heaps and heaps of land that is available, from Tarneit all the way to Bacchusmarsh, right? So
Oh yeah, I mean we're currently in Tasmania doing some research, and we drove through Victoria, and as you come into Melbourne, the city of Hume, thousands of house and land packages available there,
heaps.
and out to Geelong, we went through Werribee, the same thing there. It's a huge amount of properties, and that tends to keep the growth down. I mean, not to the point where it's a surplus. I don't think we're anywhere near that, but it's
Yeah,
certainly moderating the growth potential.
definitely.
But the other thing too, Moss, is that these are whole communities that are built up. They provide everything: the parks and gardens, little,
100%.
it's a very
Yes.
attractive living
Yes.
in those areas.
But I mean, I'll take, if I compare Melbourne to, let's say, Leopold, which is, one of the city of Greater Geelong, and you can see that, Leopold used to be really affordable, and now because the price point has been going up quite significantly, Leopold typically sells at the price of, Tarneit or Truganina, or probably like Point Cook, and so you're seeing prices of almost 850 to 900 in Lupo, right? And who would have expected that, right? You have, pockets in Geelong that sell at about 1.3, 1.4 million, right? And so, it's a city on its own, and, with a lot that's happening through, the Avalon Airport, and they're about to kick off commercial flights through Avalon Airport. I think Geelong is going to show massively different dynamics. I almost feel that, what Geelong is to Melbourne is what probably like Newcastle is to Sydney, or, Wollongong is to Sydney, or, those further west, southwest areas out to Sydney. So, yeah.
Yeah, very, very much so. And I can remember when I lived and worked in Melbourne for quite a long time, and people used to call Geelong Sleepy Hollow.
I know. Yes. Yes.
Definitely not anymore. So
No, definitely. You don't get that vibe anymore. I mean, other than some pockets, and so you need to be very careful when you're investing in Geelong. There are still pockets that I wouldn't touch with a 10-foot pole. And there are pockets that are gentrifying really, really fast, right? So it's very interesting when you're a local there, and they have a different idea of Geelong. And when you are an outsider looking inside, you can see how the area is gentrifying and how the area is changing, right? So areas like Whittington and Newcombe, for example, where people are like, oh, there's so much crime there, and now you go there and it's a completely different world. Or Leopold or St. Leonard's, and all of these areas have changed quite dramatically. And I think that's the story for every regional city. When you talk about Bendigo, when you talk about Ballarat, when you talk about Shepparton, when you talk about Latrobe region of Traralgon and Sale, all of these pockets and areas, you've seen major gentrification happening through in some of these areas. So very interesting.
it is, and they're the areas you look for. Where there's that big diversity of properties that have been refurbished and those that haven't. You find a much greater variation in price and a lot of potential as well. Now
Definitely.
let's have a look at from my database, the housing market predictive solution
Yes.
database looks at all 15,000 suburbs, all types of property, and gives you a whole lot of data. If we look at the so-called property clock, whereabouts are our capital cities and our major markets located? And of course, when we look at approaching the market peak, we can see Darwin, Perth, Adelaide, and Brisbane all firmly up there. But they're not at the market peak, as we've just mentioned, Moss. There's still growth potential. They're not at the peak yet, and they may be, it could be years to go. But that growth is certainly moderating. It's not strong growth; it's moderate growth, but it is continuing. We look at rising markets, and there we've got the whole of Tasmania as a rising market. Melbourne. In terms of Tasmania, I was talking to some real estate agents are telling me that, buyers agents are going in saying, look, we'll take whatever you've got, even if it needs renovation, because we believe that prices in a year's time will be $100,000 or more dearer then than what they are now. So it's worthwhile buying a property and just hang on to it for a year because of that market-driven growth. It's quite extraordinary.
Don't get yourself taken on a ride by property spookers, so-called property investment advisors, or buyer's agents who are selling house and land packages or off-the-plan properties or apartments. Get yourself a copy of this book called The Millennial's Guide to Property Investing. This book is not just for millennials. The title suggests, but it's actually the most advanced way of investing in property. This book will relate to your clients, your colleagues, and other business owners. There are so many property spookers out there who have come out of the woodwork over the last 3 to 5 years, and there is so much misinformation out there that I had to write a book about all the F-ups that people can actually avoid in order to be super successful in their property investment journey. Some of these are really easy to identify, but they are so costly to fix once these mistakes are made. So it's a short book, it's easy to read, it has a lot of stories, it has a lot of examples, and it is a true guide for people who wants to do it themselves. My name is Moxin Reza. This is my story, and a lot of you will relate to parts of this story if you're not born in the riches and if you're trying to build a property portfolio that can last generations and help you improve your lifestyle along the way. So I give you a chance to come out there and have a read. Be kind, stay safe, keep smiling, keep investing, and please do check out the book.
I think Tassie market is an interesting one. I was there over Christmas and New Year's. It's a very interesting market. Again, when you look at Tassie, there are pockets where unrenovated houses, sell almost 200,000 to 300,000 lower than what a fully renovated house sells for. You talk areas like, say, for example, Lewisham, where really nice houses with water views would sell for 1.2, 1.3 million. But if it's an unrenovated house, you could even fetch it for like 750, 800,000 as well, right? So like that price discrepancy is what drives a lot of the growth side of things as well. I was there, and so this is an interesting story. I was there in one of the Mitre tents there, because I always like hanging around Bunnings and Mitre tents to see as to what's happening in the area, because that gives a really good indication and the feel of what the area is doing. And I was there for almost an hour, and I saw at Mitre tent that they sold probably like 10 sets of kitchen. And so I went in and spoke to them, like 10 kitchens in an hour, like that's a lot. And she was like, yeah, everyone is a renovator here, and, that's their hobby, and they'll pick something up or they'll do some renovations. And you go around driving in any major city in Tasmania, be it Hobart or Launceston or Devonport or anywhere, right? You would see that the new builds are significantly lower. There's not a lot of new builds, and majority of those houses are weatherboard old houses. You don't see major brick houses or anything like that. So of course, the renovation market is massive. And together with that, I think the Airbnb is really, really good when it comes to Tasmania, especially during winter times, or especially during summer times, not winter times. Don't go there in winter.
So summer's definitely better.
Yes.
Yeah.
It was very interesting find, when you're there on the ground, doing some of this research, you tend to realize as to how the market is changing and how the market is moving.
Yeah. And I looked at DA approvals over the last year in Tasmania. I discovered that nearly 3/4 of DAs are not proceeded with. So when the developers do the number and say, well, is this going to make a profit or not, they realise that it isn't and they don't proceed. So they get the DA and let it lapse. And that's a lot of that is because there's been no price growth in Tassie for 5 years. It's like Melbourne. Absolutely no. And that makes it very hard for developers, but it does give massive opportunity for renovators, as you say, because you can buy a property at a very affordable price and renovate.
I was speaking to one builder there who started off about 3 years ago with 20 builds a year to in year 3, they're doing more than 250 builds a year. That's just massive, right? Because there is hardly any builders there, and the builders that are there, they have a wait time of 12 to 18 months. And so, go figure, right? Of course, there is only one direction, a market like that is going to go.
What we then want to look at, well, what about markets which are about to start their recovery but haven't yet? Are there any at all in Australia? And I thought, well, yes, let's have a look at our database, and we discovered Melbourne CBD units. Now, a lot of you might say, oh, that's, they're hugely oversupplied, massive problems. But what I'd like to do, Mass, is just explain what's actually been going on in Melbourne CBD units and what the potential is.
Yeah.
So would it be okay if I did that?
Yeah, 100%.
Okay.
For the viewers and listeners, just to create a bit of interest, can we talk about the decline first and keep the units for the end so that, people can stick around and hear about the units? People who know me, they know that, I'm a massive advocate of people not buying apartments, and apartments don't work. And so this would be an interesting conversation between me and John. But let's talk about, areas that are starting to decline, which are the key sort of pockets that we should be, staying clear of when we are talking about the decline side of things?
In Australia, I don't think there's any. Starting to decline. Areas that have reached their peak. You
You would say
might look.
Canberra would probably be one of those where, it's basically sitting there.
Yeah, I think that's probably more a declining market. It has been. If you look at Canberra, the upper price points, the dearer suburbs have been and having price falls occurring over the last few years, and that's mainly because as people get older and they retire, they leave Canberra and they go to the coast, other places, and so the decline has mainly been caused by older people leaving Canberra when they retire. That is a declining market. I think starting to decline. Probably the only areas I can really think of might be northern Queensland, Cairns, Townsville, Rockhampton.
100%.
Those areas have got a risk of starting to decline. They haven't yet, but it could well be areas that have been a lot of overinvestment in places like Townsville and Rockhampton. I'd be very wary of those in particular.
Also, when you talk about Perth and regional pockets of Perth, I think, they have seen a good run as well. And, majority of the growth and the population growth that is happening is predominantly in Metro Perth. And so, these, peripherals of Perth, where you talk about Bunbury and Busselton, they saw a good run, but we are seeing some, real price pressures building up in there as well, or no, price deficiencies building up in some of these areas as well. I'm not saying that they're going to decline, but I think when you talk about the booms curve, I think they're at the very end of the boom curve, and there might be a bit of air there before they start to mature this out, right? So
Yeah. And usually, those sorts of areas, the last to go up and the first to come back down again.
Correct. Yes. Yeah.
Bunbury and Geraldton are probably two that I think are in some danger of doing that.
Definitely.
And
Melbourne units.
yeah. All right.
Yes.
So the biggest unit market in the whole of Australia is the Gold Coast unit market. It's got over 50,000 units. Second biggest, Melbourne CBD, bigger than Sunshine Coast, Sydney CBD or Brisbane CBD. So you've got 28,000 units in the Melbourne CBD. That's an extraordinary number, much bigger than in Sydney or Brisbane.
Mm.
But it's very different. And that's because the 28,000 units have been purchased by different people. 20,000 of them are investor-owned. But many overseas investors, when they bought the new units off the plan or whatever, as they were finished, they locked them up because they sought security and long-term capital appreciation rather than immediate rental income. So, and a lot of them from China said, right, we're locking them up and keep them brand new because that way, when we sell them, they'll be sold as brand new and we'll make more money. So there are a lot of, in fact, over 6,000 units, according to the ABS, fell into that category. So that's, a big percentage. But then we also had thousands of people who bought units as cash cows. They said, look, why don't we use the Airbnb short stay rental market? So we furnish the unit very cheaply and put it on as a short stay rental opportunity for holiday makers, tourists or business people. Thousands did that as well. And this meant that the rental supply was being sort of locked up by short stay rentals and by people not renting out their units at all, just keeping them empty. So the government said, hey, we've got to do something about this. So they introduced a short stay levy, which means that if you've got a short stay rental property, you've got to pay 7.4% on the total booking fee. Now that includes the cleaning fee, everything. You've got to pay an additional 7.4% to the state government. So that was to discourage people from engaging in short stay rentals. Now we mentioned what happened in WA is the opposite. What they actually did was say, look, if you've got a short stay levy rental, what we'll do is we'll
Give
pay you
$10,000.
Yeah, give you $10,000. In Victoria, they're using a stick. In WA, they use the carrot.
Yeah.
Also, to encourage foreign investors who'd locked up their units, the 6,000 odd, they introduced a vacant residential land tax. Now that increase, it starts at 1% of the capital improved value and it goes up every year. So it's 1%, 2%, 3% each year the property is left vacant. And that applies to land development land too. So if you own a property that hasn't been developed for 5 years, you start to have to pay the vacant residential land tax as well.
So I think there's a bit of confusion for a lot of people that vacant residential land tax is not just for land, it's actually for vacant properties as well. So if a property is left vacant, that basically attracts, this particular tax as well. So a lot of the times people think that, oh, it's just on the land. It's not on the land. It's on every property that's left vacant.
Yep. If you have a holiday home in Victoria, you've got to prove to the government that that's been occupied for at least 4 weeks in every year. And the way you do that is by keeping all your receipts and so when you spend money. But it's got to be done not for money. Otherwise, you've got to pay the short stay levy. So if they don't get you one way, they'll get you another.
Yeah.
So
Welcome to Victoria, guys.
anyway, as if that isn't enough, then just to discourage foreign investors altogether because they saw them as being, they lock up the units, they don't rent them out. We don't really want them, so we'll introduce the absentee owner's land tax. Again, a massive levy on top of the land tax. So
It almost doubles the land tax completely, right?
Yeah,
The absentee surcharge, yeah.
So all of these disincentives, I guess, were designed to free up properties because there was a huge shortage of rental properties, increase the number of properties available for lease. But what happened was it did the opposite. A lot of short stay investors said, right, that's it, we're putting our properties on the market. Overseas investors said, no, we don't want to open up our properties for rent. We're just going to put them on the market. The number of properties listed for sale in Melbourne CBD doubled in the last year. So what that's going to do, of course, more properties for sale. And there's the history. That's the median price snapshot for 2-bedroom units. This is official PropTrack data. And you can see it's a bit of a train wreck. It's just been going down and down and down. Now the median price for a 2-bedroom unit is $520,000. So you think, well, is that going to keep on going down? Or is this just simply a short-term issue? It's something that will resolve itself once all the units, the surplus have been sold and the market gets back to normal. What's likely to happen? Well, look here. This is the inner Melbourne unit market, 2-bedroom units I've compared, and the price change in the last 12 months. So East Melbourne, they went up by 15.6%, Sunshine 14%. They've pretty much been going up everywhere over the last year, except down the bottom, you'll see Melbourne CBD where prices have continued to fall. So it really is the ugly duckling of the unit market in Greater Melbourne. What is that going to do in future? What's going to happen? Well, have a look here at this comparison of 2-bedroom unit prices. And again, I've used the official PropTrack data at the end of last year. The median value of a 2-bedroom unit in Sydney CBD is 1.2 million. In Hobart, it's about 920. And I think I've actually got the numbers here. You can see there it is there, 920,000. Brisbane, 825. And then it drops to Adelaide, 630, 620 for Perth. So you can see the median value of 2-bedroom units in Melbourne is way below the other capital cities. Can either mean one of two things. Either all of those other cities, the units prices are way over the mark and they're going to come back significantly, or it means that Melbourne's unit market is underpriced and has got potential to increase significantly over the next few years. Now, my belief is that Melbourne is underpriced, and it's probably near the bottom of the peak of the trough. And has got significant potential for growth in future.
I think it's very interesting. I have a client who was trying to sell an apartment in Sydney in Killarbilly, and this is Harbour View, Harbour Bridge View, Opera House View. 2 apartments actually. One was a 2-bedder, one was a 1-bedder. 1-bedder he bought for I think about $1 million something, and he was asking for 1.3 million. Struggled for almost 2 to 3 months and ended up giving it away for 1.25. Now imagine he's held this for like almost 4 years, 5 years, and there was a massive holding cost attached to it because of course it's an apartment. The 2-bedder he brought out and then took it back away because he bought it for like 2.7, 2.8 million. He was planning to sell it for 3.2, 3.3, but the market is literally not there. It's just a very quiet market, and the supply, while is there, the demand is not significantly there. And I think one of the things that I've noticed in the apartment market, which changes the dynamics of the apartment markets quite quickly is that, the supply and demand, can change like literally overnight. You might be, in a block of units which are, 400 or 300 block of units. At any given point in time, you would have at least 10% of those units, up for sale. And could be different reasons for the people selling. And because they are not owner occupied, they're all investors, they are looking purely from an ROI perspective, and some might have made money, some might not have. And so if you are not an avid investor, you might cash out and bring that money back. And so you need to be really, really careful, especially in Melbourne market, as to where are you buying. In Sydney CBD, in the Melbourne CBD market, it's a very interesting dynamics at play. And so I do agree with you that there is a small window of opportunity where people can actually come in and cash in. Okay. And, there are two more reasons that I would like to also highlight. Understand that the new apartments that are coming out, the build cost is quite significantly higher. Like really significant. Like when you talk about 2-bedroom apartments in Melbourne CBD in a new building, they would be selling north of $900 to $1 million. Basically, that's how much the disparity is. And so the old established apartments, while they're not really old, because as you said, they've been locked down, they haven't been used, they look brand new. There is almost like a 40 to 50% price discount on established versus new because of the build process that is coming through, right? And so when the demand comes through, and if you pick up the right areas, then you will see some serious growth coming through, in some of these areas and locations. One of the strategies that I always say to people, especially for people who like living closer to CBDs and are couple, I would say instead of renting, just buy, an apartment in Melbourne CBD, right? And, use 5% deposit scheme and, and just Airbnb the out of it for 3 months and travel, right? And, those 3 months would basically cover the mortgage for the balance of the 9 months, right? All you have to do is just rent it out between October to January, and you'll basically pay off the whole mortgage for the balance of the 9 months, right? And, I have a few clients who have started doing that, and they've been amazed by how much they can generate, especially in November, December, where, during New Year's Eve, these apartments can even fetch up to, $1,000 to $1,500 per night, right? So, and then you have tennis, and then you have, Grand Prix, and then you have Melbourne Cup. And so there is so much that happens within those 3 to 4 months that you can really cash out these units from an ROI perspective if you do short stay. And then the balance of the year, you just live there from, from a lifestyle perspective. So I do, definitely believe, those are the two reasons where owner occupier will come in, especially like couples. And you're seeing a lot of net migration of those type of people coming back into Melbourne. And two, because of the price discrepancy on the new apartments versus old, this pressure is definitely going to build up. And you can see even from a rental side of things that pressure is building up in Melbourne CBD predominantly. Maybe the outer suburbs, the pressure is not that high and is still climbing up, but the CBD pressure for the rent is definitely, up there as well. So would it continue to happen like this is a Perth or an Adelaide growth cycle for 2 years, 3 years? Maybe not. Is there a window of opportunity where the market is going to go and correct itself? And, we call this muscle memory, where market is going to bounce back and, come back to around 650, 700. Yes, that's definitely a potential, right? So, yeah.
It's certainly out of kilter where it is now. And I thought when I looked at Hobart in particular, I thought, my goodness, 920,000 for a 2-bedroom unit. But that's what they're selling for. So there's a big difference. So anyway, that's pretty much my contribution for this month.
And where can people find you, John? Just to give you a quick shout out.
Thank you. It's if you go to lindemanreports.com.au, there's lots of information there. I do a monthly sort of little video on what's happening around various markets as we travel. We do a lot of traveling around Australia, so it's nice to catch up maybe areas that you haven't been to or we have, and you can see what's happening on the ground. So,
Awesome.
and also, our newsletter is free as well, but just go to the website, lindemanreports.com.au. And thank you very much, Moss, once again for this. It's been...
Thank you, John, for coming on the show. And for people who are, tuning in for the first time, if you have any questions, comments, please reach out to us at info@helpmebuy.com.au. You can always also, share your stories. How are you finding the market? Where do you see your local area is heading? Are you seeing gentrification? If you have any questions or any topics that you would want us to cover, reach out to us at info@helpmebuy.com.au. Thank you for listening to us today. Take care, stay safe, keep smiling, keep investing. This is Moxin John checking out. Adios.
Everyone.